Welcome back to Brashonomics. A good friend of our show is back with us, Mr. David Bell with RE/MAX Metro Eastside, who is not only our resident RE/MAX Hall of Famer, but also has earned Seattle Magazine's 5-star Best in Client Satisfaction Award every year it's been offered. David, my man, how are you? I feel like I haven't seen you in a while.
It's only been 30 days, Ben, but good to see you. You're looking good. You trimmed down after the holidays.
Yeah, it's amazing.
Are you playing any golf at all in this lovely weather we're having?
I have not played as much as I would like. You?
I'm actually going down to Palm Springs next week.
Nice.
Yeah, for about 4 days and play 4 days of golf. I'm looking forward to that.
Another nice place to be, especially this time of year when the weather has been no inversions down there like we had a few weeks ago.
Exactly.
So, David, being in real estate for an extended amount of time,
several decades,
you've seen the real estate markets ebb and flow in a lot of different time periods. 2011, 2012 were almost polar opposites. And now we have 2013, which, we haven't really seen yet. Talk a little bit about the 2011 and 2012 real estate markets.
2011, I see. What a lot of people do is they take year over year numbers and they look at those numbers and compare them to year over year. The interesting thing is if you take and you go back to 2006 and you look at 6, 7, 8, 9, 10, 11, and 12, the interesting thing is that the total number of houses, single-family houses sold in this area, the greater Seattle area, the lowest year was 2011. So there were 2010, there were more sales. 2009, there were more sales. 2008, there were more sales. And that was the year that the bubble hit here, really hard. So there's a lot of misunderstanding about where things are. Now, if we look at 2011 and compare it to 2012, I just did a mailing to my client base, and I do it every month. And I broke it down by MLS areas, and I just took in Seattle areas, Area 390, which is basically Capitol Hill, Central District, Area 700, which is Magnolia, Queen Anne, Area 705, which is Greater Ballard, and Area 710, which is University Village, Bryant, Ravenna, that area. On Capitol Hill, there was 1% more sales in 2012 than there were in 2011.
That's not a lot.
No, but that was an anomaly. In Queen Anne, there were 33% more sales. In Ballard, there were 22% more sales. And in Ravenna, Bryant, there were 15% more sales. And overall, there were 17% more sales in 2012 than there were in 2011. That being said, in 2011, in 2012, compared to 2007, that's the year that the bubble, the end of 2007, 2012 really had 15% fewer sales than 2007. That's
incredible.
And these are things that people don't look at, but you have to look at this stuff when you look at the market and where the market's going.
So let's really put that in perspective. 85% less sales from 2007 to 2012, less transactions happening.
That's right. So do we have an inventory shortage? Yeah, we do. But we don't have a whole lot more buyers. So the number of buyers out there really hasn't increased. I mean, once the number of buyers get up to the levels that they were in 2005, 6, and 7, then we're going to see the market start to take off again. But until that really happens, we're pretty much flat. If we want to look at prices,
let's hit on that real quick. I mean, that's an incredible point because a lot of times we are talking about buyers coming out of the woodwork to buy houses. It's almost like the buyers have kind of always been there.
They're always there. They've just been waiting and
They've
waiting
just been waiting, and now they're there. They're
right.
not, for whatever reason, because there's always a demand for houses.
Yeah.
And now the problem is that there's just no houses for them to purchase.
There are fewer houses for them to purchase, but probably the percentage of houses to purchase versus the number of buyers in the market is probably very, very similar to what it was back in 2006 and 2007. Because in 2005, 6, and 7, we all complained in the real estate business, we don't have enough inventory. There's 10 offers on every house. Now, today, in 2000 or at the end of 2012, we started seeing a lot of multiple offers again. I just can talk about my own my own clients. We had one where there were 6 offers on a house, and the house was priced at $500,000. It was in Kirkland. And if that had been 2006 or early 2007 with that many offers, with 6 offers on the house, that would have been bid up $100,000. It would have sold for $600,000. Today, you're lucky if that gets bid up any more than 1.5%. So from 5 to 5.15. That's the difference. There's a huge mental difference that buyers have today versus back then. They don't feel the panic. They want to buy. It's hard to find a good house, so good houses sell, but they don't get bid up. Prices have only increased. If you look at in-city again, Ballard was the highest increase in prices because it depreciated the most. And from 2011 through 2012, prices went up 5.7%. On Queen Anne and Magnolia, they went up 3.6%. And if we want to look at nationally, a study came out by Standard & Poor's Case-Shiller. Prices went up 4.3% nationally. And what this article talks about, it was in the Washington Post, it was an AP article rather, is that there are more buyers and lower inventory. My contention is there aren't a lot more buyers, but there is low inventory, so the percentage is about the same.
David Bell joins us with RE/MAX Metro Eastside. David, so when people are trying to figure out what's going to happen in 2013, just to look ahead a little bit, I mean, as you talked about, there are less sellers out there, probably a similar amount of buyers, but it seems to me that this gap is going to have to get bridged at some point in time between what a buyer is willing to do, and now the sellers buyers are going to have to come up in price, or it doesn't feel like sellers are going to sell their house. I think that sellers have this mentality that they want to get back their losses from the peak, and at some point in time, our buyers just going to have to step up their prices.
I think there are some sellers out there that think that. I think that when people actually do need to sell, the math is pretty simple. If you're what a great time to be a move-up buyer. Mm-hmm. I mean, it's an amazing time to be a move-up buyer. Prices came down in Seattle 25 to 30% in city. They've gone up between 4 and 6% now the last year. They were flat for a year before that. Mortgage rates are just ridiculously low. Mm-hmm. And so it's cheaper for them to buy a more expensive house. They can save more money. I mean, if you're going to buy $1 million house and it's down 20%, that's $20 grand. That's $200,000. And if your $500,000 house, it's only what's $100,000. So you make up a lot. You make up a lot there. Mm-hmm. I have a client that a house, they've been looking for 2 years for a house, and there's been no inventory. And there's something that's going to come up on the market, might be priced as high as 1.3, and they didn't want to go any higher than 1. And I said, well, but compare your interest rates today to when you did it two years ago, and I bet you can find that it's cheaper for you to buy a $1.3 million house today than it was to buy $1 million house 2 years ago.
And it may be a lot more expensive in 6 months or a year.
Or in a couple years from now. But I think it all hinges on what our Congress does with our spending and our debt. I think that is a huge fear in this country, and until people feel good about that, consumer confidence, buyer confidence is really kind of shaky.
Mm-hmm, mm-hmm. The confidence also, and I don't want to get into politics too much, but I'll speak just on the media. I mean, you have these fiscal cliff, the debt ceiling that there's every 6 months. It's amazing to me that they can continue to pour these out, these awful sounding things, like literally the world is coming to the end. Yeah. The financial world, the United States. It is such a detriment to what people are able to determine is what's going on in the economy. Because people turn to the media, they turn to the news, and if you see like the fiscal cliff, a countdown clock to the end of the world, right? Of course, people are going to freak out.
Didn't the Mayans have that? Haven't we ended?
2 countdown clocks inside of December.
Yeah, I think the world's ended, and this is all a dream now. Yeah. But,
It's a good dream, though, David. It's a good dream.
Here, I'm just going to read this part about that was in the AP in Washington a couple weeks ago. It says the improvement in the housing is added by economic growth, and most analysts expect that to continue in 2013, assuming that the White House and Congress can reach a deal to avert economic damage from sharp tax increases and government spending cuts. So that is really on everybody's mind. And the press, the media, you're absolutely right. The fiscal cliff. Like what fiscal cliff? I mean, it's absurd.
Yeah.
But people listen to this stuff and they're not completely informed. They don't really sit down and take the time to really understand what's going on all the time. And, this is a great time to buy.
Yeah.
It's cheaper to buy than it is to rent for the first time in how many years? Probably 15 years now.
Yeah, quite the opportunity. David, we do have to go to break. Thanks so much for joining us. Stick around for a few minutes. We'd love to get some more of your opinions at the end of the show. Now, a lot of you guys might be driving around looking at buildings and wondering, well, what effect does all this have on buildings out there? Some people go to work in buildings. Some people own companies that are housed in buildings. What's the real estate market like on the commercial side? Matt Royal will join us in just a few minutes to let us know. We'll let you know about what's going on in the buildings.